what are you seeing in terms of those very early emerging managers? Are you seeing more of them?
Yeah, we're seeing not necessarily more of them, I would say, especially in 2020, 2021, when the market was quite active. We saw a lot more people stepping into the market and kind of raising their hand and saying, "Okay, I'm not going to be a venture capitalist. I'm going to be an emerging manager within the VC market." We're seeing less of that today, but we're seeing kind of a more kind of high quality managers willing to take that leap today.
This is Alistair, and welcome to the Venture Variety Show. If you're new here, this podcast is where we talk with investors, founders, platform specialists, and others in the broad tech and investment communities. And I'm excited to bring you today's guest. It's Braughm Ricke. Braughm is CEO and founder of Aduro Advisors. Aduro is a fund administrator. It works with VC firms, private equity funds, and corporate VCs. And Braughm and I talk today in this episode about one of my favorite topics, emerging managers. We also look at how the lines between private equity funds and venture capital is blurring and what that means for founders and investors. Braughm himself has a unique perspective. He's been in venture since 1999, and he was with True Ventures in that firm's early days. So whether you're an entrepreneur focusing on your next fundraise, or maybe you're an emerging manager worried about today's market, or maybe you're just curious about how this investment world operates, I promise you that this episode will have some key insights for you. So let's jump in and meet Braughm.
Yeah, thanks so much for having me today. So I'm the founder and CEO of Aduro Advisors. We are a fund administration platform kind of dedicated to the alternative asset space, so the broader venture capital community as well as private equity. We've been around for going on 13 years now, and I come out of the venture capital industry. Prior to founding Aduro, I was the founding CFO at a venture capital firm called True Ventures in the San Francisco Bay Area. And I started my career in venture back in November of 1999. So I've seen a multitude of transgressions or changes rather through the venture marketplace.
Well, and True is one of those firms that has been involved with some of the changes over the years with the value add services. They're very portfolio driven. Maybe we can begin there. Is that something that you've taken note of that is continuing to grow?
Yeah, absolutely. I think that was, a really interesting time, back in the kind of late 2005, early 2006 timeframe, when you really started to see the emergence of kind of the next generation platform VCs. So kind of the next generation, Khoslas, Sequoias, et cetera, with, True, Union Square Ventures, First Round Capital, Felicis, et cetera, right, Uncork. You really saw them wanting to build out a platform that can, kind of truly add value-add services back to the portfolio, right? And so True has done a really phenomenal job of that, anything from their entrepreneur core program, their internship program, to, just providing, really kind of hands-on value-add services and advice through their network of individuals. I think a lot of our clients today, determine what their value-add is ultimately going to be outside of just capital, and really kind of try to double down on that, and that becomes one of their big differentiators in what has become a fairly, not necessarily crowded, but just a more populated venture community.
Speaking of your clients, what can you tell us about the type of clients that you work with? Are they more emerging manager? Are they more established?
Yeah, so we work with about 640 individual firms that totals about 140 billion in assets on our platform today. So fairly sizable practice. Predominantly, those are in the venture capital realm. So about 85% of our book today is in the venture capital space. The other 15% is a mix of fund of funds as well as private equity. And the super majority of them are what can be considered emerging managers. And I say what can be considered because at one time they would be considered emerging managers, and where they are today, over a decade later, I think they would be hard pressed to be called emerging managers. But I think that highlights some of the exciting aspects of the market, that these firms were created 10, 12 years ago from scratch and are now managing billions of dollars on their platform today. And we've, thankfully been able to grow and scale with them over time and still work with them today, the likes of, Signify, Goodwater Capital, Cowboy, et cetera. So.
Right, right. I've heard some LPs talk about emerging managers could be raising their third or fourth fund,
Right.
depending. So,
Yeah, it's a
yeah,
very broad definition as to
yes.
like what is an emerging manager, right?
In today's market, are we seeing, what are you seeing in terms of those very early emerging managers? Are you seeing more of them?
Yeah, we're seeing not necessarily more of them, I would say, in especially in 2020, 2021, when the market was quite active. We saw a lot more people stepping into the market and kind of raising their hand and saying, "Okay, I'm not going to be a venture capitalist. I'm going to be an emerging manager within the VC market." We're seeing less of that today, but we're seeing kind of a more kind of high quality managers willing to take that leap today. And so people kind of, peeling off of larger firms, recognizing the value of, building something for their own, both from a entrepreneurial perspective, but then also from an economic perspective as well, right? And so I think that we see a lot more. And we're seeing a fair bit of corporate activity in addition to that. We work pretty closely with the broader CVC community. I think that there has been a big shift in how corporates view the venture landscape and view their participation in the venture landscape, versus what they did in the past. Back in the early 2000s, you would see, a handful of very large corporates having LP commitments effectively into funds, and you still see that to a certain extent today. But I think a lot more they're building out their own venture arm captive to their organization, or their own venture arm that's somewhat at arm's length, right? And so, at arm's length, and with their ability to go out and raise additional capital, kind of external capital around that too. So I think there's a lot of different activity points within the broad definition of an emerging manager.
On the topic of CVCs, and it goes back to what we were talking about at the beginning and the value add. I see more CVCs providing value add services, trying to differentiate from their peers. Is that something you've observed as well?
Yeah, absolutely. I think that, CVCs have recognized the strategic angle that they can bring to the table, not just, kind of ultimately being a buyer of portfolio companies, but much more than that, being an early adopter or tester of a, portfolio company's software or services or technology, just depending on what area of focus they're interested in, and really kind of expanding what's important to the corporation, right? And so is it a corporation that's looking to expand their exposure and investment in, green tech effectively, right? Or is it something that's much more Internet of Things or hardware related, or is it much more transportation related? And so I think that it's an interesting way for them to expand upon what is critical and important to their growth as well as their interests.
Awesome. You mentioned VCs, partners peeling off from larger firms and starting their own firms. Can we dive more into that? Are we seeing these partners? Are they diverse? Meaning, gender diverse, sector diverse. What kind of characteristics are you seeing from the emerging managers who are splitting off?
It's an exciting topic, right? And so, and it's an exciting topic because I think the emergence of, not to double down on the word, but the emergence of the emerging manager, right? I think that has enabled much more participation and much more activity from a, kind of a minority-run fund, right? Whether it be race, gender, et cetera. And so we're seeing a great deal of that, and we've placed a lot of focus and emphasis on our ability to support in the way that we can that trend ultimately. And so, as I mentioned, we work with about 640 firms, and just kind of looking at our numbers, we work with over 100 of those firms are diverse from a gender perspective. about 30 or so are diverse from a race perspective. And so, we have you can run the numbers, like there's a sizable percentage of our overall client base that can kind of fit within that categorization. And I think that the emerging manager trend has facilitated and enabled much of that. Yes, it's still, far from where it needs to be, absolutely, right? And so we, participate with Recast, we participate closely with Allraise to help support those initiatives to continue that trend. But I do think it has really facilitated quite a lot of a shift.
And you've been broadly in the investment business since '99, you said?
Yes.
Yeah. So, over the years, and this ties into your work with private equity, are you seeing private equity become more like VC and VC becoming more like private equity? Yeah.
Yeah, the short answer is yes, absolutely right. So you've got very large VC firms that are starting to move more into buyout, starting to get more interested in all honesty, like, companies like ourselves, a technology-enabled service provider, right? So one thing that I didn't touch on is we've got our own proprietary technology that we've built ourselves. We chose that early on as a path and as a solution for providing the services ultimately that we're providing our clients with. And so you're definitely seeing that shift from a venture aspect, which I think is really intriguing. And you're seeing private equity move much more into what I'll say is growth equity, which is, in my mind, still in the venture, category, if you will,
Absolutely.
right? And so investing in growth equity rounds in a, large software platform within, financial technology or financial services or what have you. So I do think that there's much more of an overlap and much more of a blend, a gray zone between the two. And I think that trend will continue as well, where there's much less of a bifurcation between what is VC and what is PE. I think it's much more talking about the alternative investment asset category as a complete category. And that's why we're really excited about our ability to continue to move more into the private equity realm outside of, what we've, really done so well in venture is because of that blending, because of that gray zone expanding. It just, kind of helps us facilitate that.
Yeah, continue with that. How are you expanding into the private equity realm?
Yeah, so really for us, we've built our book of business on introduction, word of mouth referral for the most part, right? And so kind of stemming from my original network in venture, I started my career at Sopanova Ventures, then 5AM Ventures, and then True, and then starting Aduro. And so really kind of building off of that original network and our original, kind of core group of clients that I signed early on. Groups like Cowboy, Lowercase, Bullpen Capital, very early clients that have helped, stem those relationships and kind of expand those relationships. And I say that in the sense of we've got really close ties with all of the partners and other service providers and, legal, et cetera, that provide serve their services to the venture community. And so that's really helped us kind of grow our client base. And so for us, it's about kind of replicating a lot of that same network effect within the world of private equity. But again, that trend of the two blending and the two, crossing over more and more, that also helps with us just kind of naturally being pulled more into that category as well.
With your work across private equity and venture capital, and going back to how the lines are blurring a little bit, is that a benefit to entrepreneurs, to company founders and executives?
I think it's a very large benefit. As you start to see more and more companies either stay private longer by necessity or by desire, I think that having more capital upstream, provides the ability to have less pressures on, those companies choosing that path, right? So whether that be avenues to liquidity or avenues to, raising additional large capital as they, kind of grow and scale at those, outside sizes. That certainly, that blending and that kind of crossover, if you will, I think helps facilitate that. And then also it helps facilitate liquidity potentially from a venture side, because as those companies kind of move up market, private equity coming in and, making a large equity investment in that company would be a combination in all likelihood of, primary and secondary dollars coming into the company. And so providing liquidity to some of those early investors where there's not a great deal of liquidity in the marketplace right now, as we all know, right? And so we're starting to see the public markets open up a little bit. We're starting to see M&A activity potentially open up a little bit. But having a new avenue for liquidity, and we've even, heard of some very large venture firms starting to think about, kind of again highlighting the crossover or the blend. Large venture firms talk about having a continuation fund, right? So like 10 years ago, that would have never been discussed within, the walls of a venture capital firm. And here we are today where, venture is very much looking at a private equity playbook and saying, hey, we can do a secondary fund, provide liquidity, but then also gain additional upside on these, spectacular companies that we're selling into this secondary transaction or the secondary fund. So, I think there's a lot of interesting things happening in the marketplace, not by design, but by just kind of market pressures in a lot of regard.
Yeah, that does sound beneficial to the entrepreneur. You mentioned the general market. I'm curious to hear your take. A lot of uncertainty. We've been waiting. I think very much anticipating things picking up and turning around. Do you have any thoughts on the outlook on how things are going to, looking into your crystal ball, how things are going to shape out?
Yeah, I think it would be great if I had, that clear of a crystal ball, right? It's always a bit murky. Um, but I do think that having been through prior downturns, right? As I mentioned, I started in November of '99, so I saw, the early 2000s, 2008 timeframe. When I was at True, we actually closed our second fund, I think 2 weeks before Lehman announced bankruptcy. So, it was very tight, but it was an exciting time to invest because of that, right? And so, the partners at True will tell you that that was probably one of their most exciting times to invest into the startup market. Um, and so I think that it makes for interesting opportunities where we're at today from an investment standpoint. I think there is a lot of uncertainty in the marketplace, more so than anything else. And it's not necessarily like the stock market or public markets are doing, terribly bad. Yes, we've had some, ups and downs, but if you look at overall, it's not like we've had a correction like we did in, '08 or in, early 2000. Um, but I think it's the underpinning of that uncertainty that's really causing a lot of collective pause in the marketplace. And so we are seeing a little bit of a slowing in terms of fundraising. But that being said, we've got some of our larger, more successful funds going out and raising capital quite aggressively and quite, not easily, but very successfully. And so I think that the market has always been what I like to call the haves and have-nots, right? And so I think the haves will always be able to raise capital when they want to and when they need to. I think it's just the other end of that barbell, just finding a more difficult time raising capital right now. That being said, there's a lot more capital coming into the market. That's one trend that we're seeing quite a bit, which is more high net worth individuals participating in this asset class. What I always kind of tell people from anecdotally is 10 years ago, I couldn't look at somebody just on the street and say that I work within venture capital, and they would know, I would never expect them to know what exactly I was talking about, unless I was walking around San Francisco, maybe. Now I feel like I can go almost anywhere in the country and talk about venture capital, and people immediately get it, right? And so like there's very very different understanding and very different perception of the venture market. So more people wanting to come into the market, more kind of smaller endowments, smaller foundations, smaller institutions stepping into the market for the first time, and just and more wealth managers wanting access to the market too. So you've got the rise of companies like Allocate, which is really kind of helping facilitate a lot of that connectivity of capital to wanting to get into this market. So there are a lot more avenues to take for fundraising.
This sounds like a good time to be an emerging manager with all these high net worth individuals, wealth managers, family offices, and so forth. coming in. Is that what you're seeing? That as an emerging manager, if you can, make your case that there is capital there.
I do. I do think that. So I think that, to your point, I think that's a really important point is you have to make your case, right? So you have to make your case for what is your differentiation, whether it be network access, your value proposition that you bring to the table for a portfolio company, your ability to get into competitive deals, et cetera, right? So
Mm-hmm.
really being able to articulate that. Um, but I think the plus and the minus of all of this high net worth capital and individual capital coming into the market is you have to be able to articulate and sell that many, many times over to be able to raise that fund. These are typically smaller checks, and you have to effectively knock on a lot more doors, right? And so I think it just creates a bit more of a it's a longer road for fundraising. And yes, it's harder, of course, because you're having to knock on more doors. But I do think it is a longer road, longer path. And that's one of the biggest questions that we get from kind of a lot of our emerging managers is, hey, is there anybody you can introduce us to, or do you have like a list of family offices or high net worths or anybody that would be interested, right? And so I think that tapping into that capital, yes, there's a lot more searching for access. I think still tapping into that capital is a bit of a black box, right? But like I said, you've got facilitators out there trying to solve a lot of that pain, like Allocate and others, et cetera. And so I think that will progress and that will get better. But I think still we're early days to a certain extent of that level of capital kind of accessing the market.
Excellent, excellent. Any final thoughts, Braughm?
No, I think, to your point, it's an exciting time to be an emerging manager. I think that we'll see a lot more of activity, both in the venture and as well as private equity side, as access to capital becomes more readily available to these managers, and they recognize that, being a part of a larger firm maybe isn't the right path for them, isn't the best path, and they want to carve out and build something of their own, right? And so, these are naturally entrepreneurial people. They're investing in entrepreneurial people, and so, I think that, recognizing building a firm is very much a startup in and of itself. So we're excited to help support those startups, the way that we do.
Awesome. Well, thank you very much, Braughm. Thanks for tuning in to the Venture Variety Show. I hope you enjoyed that episode with Braughm Ricke. Lots of takeaways from Braughm on how the venture world is evolving, to the rise of founder-led funds, to where might we find opportunities in today's investment landscape. So if you enjoyed this episode, please remember to like and subscribe and share it with a friend. And please drop in a comment. I love to hear your feedback. Also, if you're on YouTube, go and check out my other podcast, The AI Cognitive Shift, which I do in collaboration with AInews.com. Thanks again for tuning in to the Venture Variety Show, and we'll check you out next time.